Hey, what's going on? Welcome back to the channel. In this video, we're going to be taking a look at Sologenic. I do want to say that I'm not a financial advisor. You should do your own research before investing money into crypto. If you haven't seen the previous update, make sure to watch that before watching this one. It's going to be linked in the top right hand corner of the screen. Now, let's jump straight into the TA. So taking a look at the daily chart, as you can see, we have a Fibonacci retracement set up from the swing high we printed back in April last year, and the swing low is set up with the February swing low that we had back in 2022 in February. And as you can see, we retraced all the way down to our capitulation target at 12 cents roughly. We were targeting these levels before we started breaking down. So we had this fib set up and we knew about all of these support levels. We knew about the support level at 17.5 cents, at 0.1225 cents. So all of this was clear to us. And if you followed my videos and you really paid attention and you had all of this set up on your charts, you could have been able to predict this, or not predict, but expect this and be ready for it at least with some buy limit orders. Now, this is the chart from Gate.io. We're going to take a look at a different chart on the weekly. But for now, as you can see, we're breaking below this support level, which right now is sitting at around about 14.5 cents. So you had retested this level as resistance here. You broke above, you came back down as support. I was targeting this after this pump. When we were sitting all the way up here, I was telling you that, we are probably going to come back down there, but I would be buying, somewhere from the golden ratio, perhaps if you threw a fib there, and the 1.272 was a good entry, but we ended up coming back down to this yellow support trend line. From there, we had another move to the upside towards the 1.272, then another retracement to the yellow trend line, and then another move to the 1.272, and then another retracement to the yellow trend line, and so on and so forth. And right now you're once again sitting at the yellow support trend line, slightly below it. So that is where you want to be dollar cost averaging, in my opinion. Not a financial advice, but this is where you want to be entering, because the last few months, every time you were in that area, you saw a move to the upside. Of course, you can also target the second fib level if we see a capitulation or a further pullback, and you can just retest that bottom there and continue from there to the upside. That's also something that could happen, but of course we do not want to be losing this September 2022 low, because if we do that, we're going to be simply continuing the downtrend with lower highs and lower lows, and we don't really want to be doing that now, do we? Because we want to see a healthy uptrend. So potentially, if we start breaking back down, you can target this little support block here. Let me set this up for you. So from there up until there, as you can see, you have a major support block from December of 2022. Every time you had a move to that support block, you saw a bounce relatively soon after that. So this is something that we could expect happening in the next few days once you bottom out in this purple support block. So this is definitely where I would be dollar cost averaging. Now, taking a look at the daily RSI, if I extend this yellow trend line there, this is not something that we want to be targeting anymore, I would say. But as you can see, back in March, we had a move to the upside all the way to that yellow resistance trend line. As you can see, that was previously our support multiple times. We broke below, back tested as support, and then we held it as resistance for quite a while. So this is a sort of on and off thing with this trend line. But as you can see, this past March move to the upside was a great opportunity to swing trade, and now you're pulling back down and you can start targeting this pink trend line. So we held this trend line as resistance multiple times, then we broke above and held it as support, and we had a few fake outs here and there below the trend line, but for the most part, once you see a bounce from it and you start hovering around the level, that's when you want to be entering. And as you can see, we've had multiple strong impulsive moves to the upside. So I'm just saying, if you see the price come back down to the pink trend line, that's a great area to dollar cost average. Also, this support block on the RSI, so anywhere between 26.48 down to 15.97, that is an amazing buying opportunity. As you can see, every single time you were in this support block, you saw a move to the upside. So if you see a dip into that block, that's where you want to be dollar cost averaging, and perhaps that's where you want to be buying the most because that's the cheapest point. And I do want to switch over to the weekly chart now. And before we continue with the video, guys, I quickly want to give a shout out to everyone who has joined my Patreon. Thank you very much. And if you want to become a part of the Patreon and, get access to a lot of exclusive content, such as podcast episodes for patrons only, my trade alerts, my entire portfolio. I share everything that I buy and everything that I sell. If you want to leave some requests, we can take a look at your projects on Patreon. So there's a lot of cool stuff going on there. I try to do daily updates and daily posts in there. So if you want to try it out for free, you can do that as well. There's a 7-day free trial, so you can do that and let me know what you think. Let's get on with the video. So moving into the weekly chart, as you can see, you have a major support block here set up between 14 cents and 10 cents. And you retested this back here when you opened trading back in 2020, in March of 2020. And then you had a move all the way down here in 2021. And then you had a back test here in October or September of 2021. And right now, as you can see, you're just holding above this support block. That's an amazing buying opportunity. So we want to be looking at that for entries and close to support. This is where I would be entering, to be honest with you. And we have another trend line here that is holding us down. We've had multiple retests, once in April last year, once in October. If we see another move to the upside, we could get rejected from that trend line and get sent back down into the bottom of the support block before we eventually break out. But once we break out of this structure, that is going to be a major bullish sign, because once you break above a major trend line, you typically do that quite impulsively, and the volume indicator should obviously confirm that, because if there is no volume coming in, that is probably going to be a fake out. But if we have good volume coming in, the price is moving quite impulsively to the upside, and let's say you still haven't entered, at that point I would wait for a pullback to the trend line, and once you're there, you can enter off of the back test of support and you can continue on. Obviously, it doesn't play out like that every single time, but that's something that we can hopefully expect to see. But really, I don't like the way this is shaping up, because you're printing lower highs and you're bouncing off the same horizontal support. So in some instances, this would really be counting as a descending triangle, and usually you see breakdowns from there. So hopefully we don't lose this low here that we printed in September. Hopefully we don't lose this 2021 October low. And yeah, that's pretty much everything that I have for the weekly chart. On the RSI side of things, let's see what we can do here. So we can add another support trend line here. Let me just do that and do that. There we go. So that support trend line, that was an important trend line that we were holding for multiple months since September 2022. And we did manage to break below there right now, actually, in April. So this is negative. This is not really good. I'm going to be honest with you. You don't want to be losing a major support trend line, but this just means that we might have another good buying opportunity. So what you can do is you can target each one of these local lows here for a potential bounce. So you have a level there, you have a level there, and you have a level there. So once you bounce off of that one and you see another move to the downside, you can enter there and have some spare cash as well, because you might just bounce there and come back down once again. So these are some of these levels that you want to be eyeballing on the weekly RSI. But overall, this is a low cap project, so it can be quite, you can have quite volatile periods of time. So you want to be ready for that with some cash on the sidelines. And like I said, once again, these are good levels in my opinion to start dollar cost averaging. So that is pretty much everything that I have for Sologenic. Hopefully you enjoyed that update. Not a lot has been happening with this project for now, but obviously come the bull market, we can see strong moves to the upside like we did here back in 2021. So thank you very much for all the support. Thank you very much for watching the video, and I'm going to see you in the next update. Take care and goodbye.